Hey, what's up, traders? How you guys doing? I hope you guys had an amazing weekend, and I hope you are having a great day, because it's already Monday. It's a new day, new energy, new video. That's why I'm making this video. And today, guess what? I want to show you guys something crazy. I want to show you something that proves why trading is not about chasing candles or chasing direction, or gazing the direction, no, or jumping into random trade, no. It's about patience, it's about discipline, and most importantly, it's about understanding key zones. Boom! Understanding key zones. So, few days ago, which was last week, I uploaded gold weekly market analysis using smart money concept, SMC. So in that analysis, I clearly mapped out a key supply zone where I expected price to react. I wasn't interested in selling in the middle of nowhere, no. And I wasn't interested in forcing any trade. Instead, I identified the area where I believe the institution and the smart money could step back into the market. What did I do? I simply placed my sell limit above the market and simply waited. No stress, no emotion trade. I didn't even trade with emotion. No chasing price, no staring at the chart all day. I just trusted my analysis and let the market do its own work. It's so simple. And guess what happened? I won that trade. I win. Like, I took a lot of profit. Yeah. Price rallied right into that zone, trigger my sell limit exactly where I wanted it, reacted from that area, and then drop all the way down into my take profit. That's amazing, bro. Look at this. Look at it. I made this money using $500. I made this money using $500, almost 2,000 something. My first lot was 0.05, and the second one was 0.10, and these two positions gave me almost $2,000 using $500. So yes, like, this is why I always tell traders, your money is made before the trade is even placed. Most traders spend their time looking for entries, but professional traders spend most of their time identifying the right zone. Once you understand how to map out these zones and wait, patient. If you're patient enough to allow this market to come to this zone and you take your trade, you will win trade. You will make money, a lot of money from this industry. So think about it. If you know where the banks or bankers are likely interested, if you know where the liquidity are sitting, and if you know where the price is likely to react, then you don't need to chase the market. You let the market come to you. Let the market come to you. Relax. That's exactly what happened to me here. I waited for the market. You know, if you guys really go back and watch that video, you will see that I mapped out this zone. I'll be like, oh, I'm gonna wait till I don't want to buy, even though the market is doing retracement. I don't want to buy, because for me it's like catching a falling knife. I don't want, because all my structure was telling me the market structure was bearish. So what I did was I mapped out a zone where I want that market to react on, and the market came and trigger it. The market respected the zone, the sell limit got triggered, the reaction happened, and the trade played out exactly as I planned. Now, does that mean that every trade will be a winner? No, of course not. No strategy wins 100% of the time. Yes, no strategy wins every time, no. But what separates profitable traders from struggling traders is that profitable traders follow their process. They identify market structure, they identify liquidity, and they identify their entry zone, and they execute with discipline. What do I mean by discipline? They execute their market with discipline. And what do I mean by this discipline? Using proper risk management. That patient, that's discipline. If you're patient in this, you have a lot of discipline. So the reason why many traders lose money is because they see candle moving and all of a sudden, or they just feel like, oh, they're missing out. They jump in too late, they move their stop losses, they overtrade, and then they wonder why the market keeps taking their money. Bro, the market keeps taking your money because you are not patient. You don't have a strategy, you don't have an edge. You just see market moving and you just want to hop in and you go to smaller time frame, you're looking for where to end. No, that's not how you trade. The patient trader is sitting there, like they sit there with their limit order, waiting at a key level or a zone. That's the power of trading key zone. A key zone gives you a clear plan, a clear entry, a clear stop loss, and a clear target. And most importantly, it removes emotion from your decision making. Understand this. Looking at this trade right now, the best feeling isn't even the profit. Yeah. The best feeling is seeing the analysis played out exactly as I expected. That's what builds your confidence, not gambling, not luck, and not hope. So confidence comes from having a trading plan and seeing the market respect that plan. So if you're serious about becoming a better trader, stop forcing on cashing like every move in this industry. No. Start focusing on identifying the high quality zones. Yeah, because one good zone can be worth more than 10 random trade. Remember, the market doesn't pay traders who are busy. Rather, the market pays traders who are patient. Yeah. And today I'm going to also analyze another market. I'm going to hop in this chart and analyze the market for this week and see what we're going to get from this week. I believe that we're going to make a lot of money. And if you find this video valuable, subscribe to my YouTube channel to stay updated. So now we're going to go ahead and hop into the chart and analyze gold. After analyzing gold, if I have any other pairs I want to analyze, I also analyze it. But due to I don't want the video to be too long, I would only analyze gold. Maybe another day I'm going to analyze another pair. So let's get into the chart. See you guys. Yo, so guys, welcome back. Right now I'm currently on the chart right now. So right now, you guys remember I uploaded my gold weekly analysis using smart money concept, and you know what? Market respected our zone and hit my take profit. Now I'm going to show you guys exactly what I did using SMC, right? You guys remember last Monday, market opened and left this gap behind. Now let me mark it out. Let me use this. So this gap was left behind, and last week I said the market is likely to come to this zone. We've already have like a failed order block because here was acting as order block, and this market moved down. Look at the price that broke this order block. Now I labeled this as my failed order block. Now I'm expecting this market to tap to this resistance and start moving down. And what did I do exactly? What I did was to place my sell limit. Look at what I did. So I actually placed two sell limit. First sell limit was 0.10. So it was here. So let me map it out. Sell limit 1, and my sell limit 2 was here, was above here. Sell limit 2 was above here, and my stop loss was above this zone. My stop loss was above this zone. That was my stop loss. So this is exactly what happened. And you know what? Market respected all those zones. Price rallied right into that zone, trigger my sell limit where I wanted it. It triggered it, react from that above. If you watch clearly from the last video I post, I mentioned something like the market is likely to consolidate in this area, then manipulate and start dropping down SR. So what the market did is like it reacted in this area and then dropped down right into my take profit. And I close on my pro. I use $500 as my capital to make 2,400 and something dollar. If I can do it, you can do it. No stress. No, I was just like patient, waiting for the market to come into my zone. That's what makes you a professional trader. I always tell trader, your money is made before even the money is placed. Most traders spend their time looking for entries, but professional traders spend most of their time mapping the right zones. These are the right zones. You see, it's just so simple. It's clear. Look at it. Look at it. Look from here. Look. Tell me what you see. It's so simple, clear. Let me drink my matcha. I have matcha on it. It keep me focused. So yeah, this is past right now. I made money from this market, and we are in a new week. What today's date is what? It's already 8 a.m. in the morning, and it's Monday. So right now we're gonna analyze the market for this week, and if I will be looking for entry today, I also map out the necessary zone I want the price to react about. Just think of this: if you know where the bankers are likely interested, or maybe you know where the liquidity are sitting, and if you know where the price is likely to react, then you don't need to always chase the market. Let the market come to you. That's exactly what happened to me here. Look, for example, here is my liquidity. I know that the liquidity are laying here, this particular place. This is a lot of liquidity, and I know that this market will tap to this zone and manipulate it, sweep liquidity. It's going to clear all the liquidity sitting here. So that's why I put my sell limit 1 here and also put my sell limit 2 here. In case my sell limit 1 tap in and they sweep liquidity, that means they're also going to tap my second sell limit, and I'm making money. Because I know this market is going, because the overall bias is telling me bearish. So I wouldn't be trading against the market. So that's why I focus on sell only. Sell. So yeah, so let's clean all this stuff and analyze market for today. Where did we stop? Let me clear all this stuff. Now, what am I expecting in this market? Let's go to higher time frame and see what the higher time frame is still giving us bearish. Remember this leg has been broken. This leg has been broken, which is like break of structure. It closed below it, right? The candle closed below it. So for me, it's like break of structure already, and it came back. It's reacting towards this block right now. Yeah. So what I'm expecting this market to do right now is, let me go to 4-hour time frame. 4-hour time frame. Now in 4-hour time frame, this is our failed order block, right? And as you can see, we have 1, 2, 3 touches on this zone. Now, what is the last leg that broke this structure? Look at this break of structure. I'm seeing break of structure here. There's break of structure here. This is break of structure. Let me delete this one. This is break of structure. Let me mark it out. This is break of structure. So now the market has opened and gave us this huge candle. It means for the moment it's gonna be bearish, but I'm not gonna hop into this market. I don't want to trade against the market. I just want to be looking for sell. So what I'm gonna do is just to find out that zone, that key zone that I will be waiting the market to react on. Now look at the key zone I will be focusing on. Right now, this is the zone I will be for today. From here, that's where I'll be focusing on. Yeah, because this area has played out already. I don't need to be looking at anything for here. I don't have any business from this zone. So this is the area, this is the box I will be looking out for this week. Now let's go to before we go to smaller time frame, let me map out, like there's something I see fair value gap. Look at my fair value gap. So let me map it out. I have fair value gap here. Now this is my fair value gap. Let's go to 2 hours time frame to see what 2 hour time frame is telling us. Now you guys can clearly see I have a fair value gap here. It means like this market is likely to retrace to that fair value gap and fill it before going down. So I will be waiting for market to arrive to this zone. So this is what I will be doing. Let's go to 1 hour time frame. So 1 hour time frame. So this is the last leg that broke the structure. So this is the last leg that broke the structure. I wouldn't be using this. The market is likely, I'm seeing this as liquidity. I'm seeing this area as liquidity. So what I'm going to be doing is, like, let me go to 1 hour time frame. So I will be using here, this is the last leg. Yeah, let me remove this fair value gap. This is the last leg that break the structure. So I want to see this market react on this zone. So my first sell limit is gonna be like this. First sell limit has to be here. Let me remove this. First sell limit should be here. Sell limit 1 and my sell limit 2 should be here. Sell limit 2 should be here, and my stop loss should be above here, something like this. Above here, that's my stop. My stop loss should be here. Let me allow you to breathe a little bit. Yeah. So this is what I'm this is what I'm looking for this week. I want this market to actually I would have just used this as my order block, but no, I'm seeing like I'm seeing here as my liquidity. I feel like market is gonna clear this, tap into this zone, move down. Even though this market has to come to this zone, I don't think it can break here. So it has to focus on this place. This is the last leg that break this structure. So I'm expecting this market to tap into this sell limit 1 and start going, right? Because if I use here as my order block, I mean they will know that there's a lot of stop losses here. So they will likely to like clear those stop losses, sweep that stop losses and start moving. So I think my sell limit 1 and sell limit 2 should be like this. This is what I am expecting this week. So yeah, let's see how this market turns out to be, and just tell me what you think this market is gonna do on the comment section. And if you find this video valuable, make sure you like and subscribe, and I'm gonna see you guys on the next one. Yeah.